Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and with us today is Roy Friedman, President of US Mint Authorized Purchaser, MTB. Roy, thank you so much for joining us today.
My pleasure. Thank you for having me back.
All right, well, I'd first like to discuss the price action in the precious metal markets. Can you give our viewers an update on the recent price action in the precious metal markets, maybe since the last time we had you on, which was late June?
Yes. Well, the market has experienced a little bit of volatility. Gold continues to follow the ebbs and flows, mostly created by strength and/or weakness in the U.S. dollar, and the headline stories, that deal with the North Korean situation. During periods highlighted by geopolitical tension, we've seen gold, move up towards the 1325 to 1350 level, and as those tensions subside, as we're seeing at the moment, accompanied with a stronger U.S. dollar, the market has probed the lower side of the trading range, which is what we've been doing for the last couple of days, with support being shown, in and around the 1275 region. So, that pretty much gives us a rather well-defined trading range, that we've seen the market, rotate through, for much of the last several months. So, now we're on the low end of the range. We're all anxious to see if physical demand improves down at these lower levels, and some event drives the market back up. At the moment, from my perspective, physical demand, while improved over the last couple of weeks, is still not great, and the market may be prone to probing a little bit lower from these current levels.
Right, and can you expand on the kind of physical demand you've been seeing for both gold and silver at MTB?
Yes, well, gold and silver. Well, let's start with gold. Gold demand has been difficult to gauge for much of calendar year 2017, and the reason I say that is it's no secret that sales of U.S. Mint products so far for calendar year 2017 are at their lowest levels in 10 years. And much of that has to do with the fact, that there has been a lot of gold eagles and gold products previously purchased being sold back by investors and collectors alike. So the backdated coins, as we often call them, in my trading community, sell at slightly lower premiums than a brand new coin that we purchase as a distributor directly from the U.S. Mint. And with many of these coins being available on the market, many consumers and many investors are taking advantage of the lower premium backdated coins and purchasing those instead of the higher priced, freshly minted 2017s. So while sales of 2017 dated products by the U.S. Mint are at sharply lower levels than we've seen in many years. There is an increased turnover and an increased amount of trading in the backdated coins, and nobody, because there's no central clearinghouse for this product, nobody really knows how many backdated coins are being sold and then repurchased. So, my hunch is that if you were to include the backdated coins that are changing hands, along with the 2017 coins that the U.S. Mint has sold, that the overall turnover of Gold Eagles is not quite as low, as we all read on, the internet and, whatever other articles, and news sources, we're getting information from, would lead you to believe. Demand is not great, and, it's certainly not what it was a couple of years ago, but it is not as bad as, simply looking at U.S. Mint sales figures from 2017 and comparing them, over the course of the last couple of years.
Now, when you compare the demand for gold and the demand for silver, what do you see over at your company?
Well, it's, the demand for silver, like gold, as gauged by U.S. Mint figures, U.S. Mint sales figures is not great. Sales of silver eagles, if I'm not mistaken, are down about 50% from where they were last year. Now, silver demand, I would say, is overall weaker than gold demand and has been for the last couple of months. And the reason I say that is where investors and collectors do sell back the gold eagles and the gold bars and the gold maple leafs that they have previously purchased, most investors and collectors who buy silver do not sell it back at the same pace as gold is being sold back as. So so what I'm trying to say is the person, the investor, the collector who buys silver, in my experience, is more likely to hold on to it than the investor who buys gold. As such, I would say gold demand is actually better than silver demand, despite the year-over-year comparison of how many silver eagles the U.S. Mint may have sold in 2016 versus 2017, and how many gold eagles they may have sold in 2016 versus year-to-date 2017. So silver tends to be, from my perspective, the investment that people do not sell back. Not that some investors, don't, because certainly they do, but the sellback of silver eagles is a much smaller percentage than the sellback of gold eagles.
Why do you think that is, that people don't sell back silver as often?
I think there's a couple of reasons. Number one, just by virtue of its outright price, somebody who sells, somebody who buys 10 ounces of gold, and sells it back, at current levels is going to receive, something approaching $13,000. Somebody who buys 500 ounces of silver is going to, which is what we commonly refer to as a mint sealed box, is only going to receive back $9,000. And, not that $13,000 or $9,000 isn't a lot of money, but it's a whole lot easier for someone who's in physical possession, to liquidate a couple of ounces of gold, than it is to carry around or potentially bring a mint box of silver eagles to the post office or the UPS store and try and sell it to their local dealer. So I think the convenience of selling back gold, has a lot to do with the fact that, you see gold being sold back much more often than you do silver.
All right. And one of the other topics I'd like to discuss is the U.S. Mint rolling out a new coin. Recently, they just rolled out the Palladium Eagle. And what was actually really interesting when they did this, the first week of offering this, they completely sold out as much as they created. The 15,000 coins they created, they completely sold those out. What kind of, is there a lot of excitement over at MTB about the in demand for Palladium Eagles?
Yes, we were very pleasantly surprised, at the demand for the new coin. We wish the Mint had made a lot more of them because, so few investors and collectors were actually able to purchase one. At our level, we purchased coins on an allocation, from the US Mint, and we sold them to our customers. We didn't have enough to sell to all of our customers, and I'm sure your company didn't have enough coins to sell to all of your customers. So, this was the first of its kind. The first of its kind in a collectible sense is something that everybody wants to have. And at the end of the day, only 15,000 coins were produced. And even if every investor or collector who wanted one got one coin, they only wound up in the hands of 15,000 individuals. And the great likelihood is many individuals purchased more than one coin. So, it stands to reason that a lot fewer than 15,000 households or individuals were able to purchase the coin. And that was unfortunate. Palladium is not the easiest metal to work with, and the U.S. Mint was only able to acquire 15,000 blanks to produce the coin. I'm certain had they recognized how strong the demand was going to be, they would have made every effort to acquire more blanks and sell more coins. But unfortunately, that was not the case.
Now, you mentioned how there was a decline in both gold and silver eagle sales this year at the Mint. What about platinum coins?
Well, the U.S. Mint, like what they've done with Palladium this year, basically had a one-and-out policy, meaning the U.S. Mint produced a very limited number of platinum eagles this year. They produced, if memory serves me correct, 20,000 coins. And those coins were all sold very quickly early in the year, and they were either sold in January or February. January, if I'm not mistaken, actually. So they basically employed a similar strategy to perhaps what they decided to employ with the new Palladium coin, and that was they did not want to have the inventory on the shelf at the end of the year, so they made a limited run of coins, and that was it. The true answer to your question, really lies with a decision maker at the U.S. Mint as to why they only produced 20,000 coins for the entire year, and they all came to market, in January or February. I'm blank. I believe it was January, but they've had the rest of the year to produce more bullion coins, but they obviously opted not to do so. My hope is that in calendar year 2018, the U.S. Mint will make efforts to acquire more blanks, both in platinum and palladium, and hopefully the success of the 2017 Platinum and Palladium Eagle sales will continue in 2018, and 2018 we'll see more coins available for the marketplace. At this point, though, I couldn't tell you what the U.S. Mint's strategy or forward-looking plans are for the sale of those coins.
All right. Well, Roy Friedman, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had?
I think the market is showing signs of coming back to life, for lack of a better term. While I wouldn't prognosticate and tell you what the low is and is going to be, and what the when the next rally is going to begin. I will tell you from my vantage point, I see some asset classes, that could be subject to a very, very significant correction, and I think that all speaks quite favorably to the upside potential for precious metals, gold, silver, platinum, and palladium. So, I think that, with that, I'll just say I continue to believe that the downside risk is somewhat limited, and the upside potential is greater than the downside risk. With that, I'll close.
Once again, Roy Friedman, President of US Mint Authorized Purchaser, MTB. Thank you so much for joining us today.
Thank you, my friend. Speak to you soon. Bye-bye now.